Hello, welcome to Alex Financial Insight Show. In today's video, we will continue to analyze the fundamentals of the big tech companies. We will focus on R&D expenditures. The companies that will be covered are nvidia, Apple, Microsoft, Google, and Amazon. Before we go to today's video, let's see what we have done regarding these companies in the previous videos. In one of the videos, we tried to analyze the stock price growth for these leading tech companies. And in that analysis, we observed that nvidia's stock price growth is the best as compared to the other four companies. And that is followed by Apple and Microsoft, and then Google, and then Amazon. And then in the subsequent video, we tried to analyze revenue growth for the same companies. And comparing a volatility adjusted revenue growth, we noticed that Amazon was the best performer, followed by Google and Microsoft, nvidia, and Apple. And then we tried to make a conclusion based on the observations we get from those two videos. And the conclusion was that NVIDIA's growth has some speculative element because its stock price growth was not supported by revenue growth. And then also we concluded that Amazon has a high revenue growth, but it doesn't appear that that was translated to an elevated stock price growth. And we also concluded that Microsoft performed the best as compared to the companies under review. Okay, now let us move to today's topic. As I mentioned, today's topic is about R&D. We will see its growth, efficiency, and risk. Okay, why is this analysis needed, or why should we analyze research and development spending? Basically, research and development spending plays a significant role in innovation and financial growth, and therefore it's important to see how R&D spending varies across these major tech companies. Okay, so basically we can explore which companies have shown consistent R&D growth, and then we will also see which companies has efficient spending relative to revenue, and how does R&D spending volatility impact investment risk. So in terms of data set, we're going to see R&D growth rate. We're going to see R&D to revenue ratio. This is what we call efficiency. And then we're going to see standard deviation of the R&D to revenue ratio. And then we will consider standardized R&D to revenue ratio. This is a risk adjusted efficiency. And then we will see a correlation between R&D growth and a volatility adjusted R&D to revenue ratio. So this is a trend of R&D expenditures growth. You can see it was very high around the beginning, okay, and then the rate appears to come down over time. And now let's see is the summary table which has averages. Okay, this is a summary table. Okay, and as you can see, for all years, if we see all years, okay, Google is the best performer. Okay, it leads in terms of long-term growth. Okay, which is like growth rate of 51%. And then if you see, Amazon shows inconsistency. Okay, basically if you see the last 3 years, okay, the most recent last 3 years, this growth is negative. nvidia, okay, has shown The highest growth in the recent years, yeah. See nvidia, it was 21% when you see overall years, but if you see the most recent 3 years, its growth rate is 31%. Then if you see the recent 5 years, its growth rate is 30%. Okay, and Apple and Microsoft show stable R&D growth, and basically similar to nvidia, they showed a increasing growth rate in most recent years. See, the average for the recent 3 years is 12% for Microsoft and 17% for Apple. And if you see the 5 years period, recent 5 years period, 13% for Microsoft and 16% for Apple. Okay. Now, this is the trend for R&D to revenue ratio, and I call this as investment efficiency. And basically, it shows how much of its revenue or what percent of its revenue is a company allocating to research and development. And basically, as you can see, over time, it shows an increasing trend. Okay, and we have a table for this one too. And now let us see the average. Okay, so this is a summary. This is a table. We have 3 periods, like this is all period. Okay, and then we see the most recent 3 years, and then we see the average for the recent five years. Okay, as you can see, nvidia is the biggest revenue spender, okay, on R&D. See, if you see all years, it is about 21%. You see, for the last 3 years, it was also about 20.3%. And if you consider the last 5 years, it is 22%. Okay, so it spends a significant percent of its revenue on R&D as compared to the other companies. Okay, then Google and Microsoft. Okay, Microsoft and Google, they also dedicate a significant portion of revenue to R&D. You see, and as you can see, in the recent years too, they you know, they do better and they do well. Amazon is in the fourth place, mainly due to a recent increase. Otherwise, you see Amazon, if you consider all years for Amazon, it is in the list. But you can see the most recent 3 years, it is almost 14% growth. And then if you consider also the recent 5 years, it is about 13% growth. And Apple is in the last place, yeah, consistently in the last place across all 3 periods that we are considering here. Now the next thing is, let us see the R&D to revenue ratio volatility. Okay, is it stable? Is it consistent across the period that we consider? Yeah, and we will see that by calculating the standard deviation, and this is the standard deviation of R&D to revenue ratio. And if you can see, as you can see, Google has the highest standard deviation. Yeah, that means it is the most unstable or inconsistent. Okay, R&D to revenue ratio. Then that followed by nvidia. Okay, and then Amazon, and Apple is in the last place. Okay, it's less volatile. Okay, it's less volatile or most stable. Now, since we already have R&D to revenue ratio, and since we have calculated the standard deviation, and the next thing I did is to calculate a risk-adjusted R&D to revenue ratio, or we can call this as a risk-adjusted efficiency. Okay, and this is the trend, and it is increasing, but obviously there is a change now when we compare this risk-adjusted R&D to revenue ratio with an adjusted one. And now the table clearly shows us that, and let us move to the table and see the average. So this is a table, okay, across all the 3 periods. So now, if you can see, it appears like the most efficient R&D spender is Microsoft across all periods. See, If average for all years is 6.38%, then if you see just the recent 3 years, it is 5.51%, and then 5 years, 5.7% most. Okay, and that is followed by, I think, nvidia. Nvidia efficiency remains stable and pretty much the same across all 3 periods. And Apple and Amazon has improved R&D intensity or efficiency in recent years. As you see, Apple, and Amazon, they improved in the whole period. They were about 2.5% both, and now they improved their efficiency. Okay, and Google is in the last place now. Google is in the last place, and keep in mind Microsoft is the best performer here. Now, what I did is I tried to see a correlation between R&D growth and risk-adjusted efficiency. Okay, the growth rate of research and development and risk-adjusted R&D to revenue ratio. Okay, and this is the table that have the correlation, and as you see, for 3 companies, nvidia, Apple, and Google, there is a negative relationship. Okay, Google, Apple, nvidia have negative correlation. This means that there is a high R&D growth, but there is an inefficiency in spending of their revenue, basically. See Microsoft. Microsoft has a positive correlation, meaning Microsoft increases R&D spending while also maintaining efficiency. And Amazon has a positive but a small correlation, and basically this is 0.02. We can say there is no big association as such. Okay, so what do we conclude? In conclusion, based on our analysis, what we see is Google and nvidia have high research and development investment. Their spending is volatile and they are less efficient. So basically we can infer that these 2 companies are good for investors looking for long-term growth and innovation. Microsoft has a stable R&D. Okay, it balances between growth, efficiency, and stability. Apple keeps R&D spending low but efficient. Probably it may be prioritize profitability over an aggressive innovation. Okay, it may appeal to a low-risk investors. Amazon has shown like a negative R&D growth rate in recent years, so potentially we may need to look into this in detail. Now, interestingly, if we try to connect the 3 videos that we have done, by 3 I mean this one and the previous 2, and in all cases Microsoft appears to be the best performance. Okay, it has like a stable revenue growth as compared to the stock price growth, and now it has a stable R&D growth, and the R&D ratio grows. It is efficient, and it balances between growth and efficiency and all of that. Okay, now thank you for watching, and if you like the video, please subscribe, share, and also please provide your comment. In the next week's video, we will try to see in detail the fundamentals of these leading tech companies, and have a good time.